Hello traders, hope you've seen my initial video that started talking about this strategy that I'm going to teach you. In this video, which is the second video, if you haven't seen the first one, please go back and see it and understand why I'm showing you this strategy and why you have to be careful with option trading and all the videos that you find on YouTube. Okay, so go back and see the initial video that I posted out. Okay, in this video what I'm going to show you is how to set up your IQ option platform to be able to follow this strategy correctly. Okay, so as I told you in my first video, this will have about this sequence of videos will have about, I don't know, 4 or 5 videos maybe, and also a PDF file that you can request by email. You'll find my email below in the description of this video, so feel free to send me an email and request the PDF file. I'll send it out to you free of charge, of course, no strings attached. It explains step by step everything that I'll be talking in these few videos, and teaching how to set up your platform, how to be trading, all the rules in paper and black and white with screenshots. So feel free to contact me and request the PDF. Okay, another thing before we continue with this video, please set up your IQ option demo account by clicking the link below, which will send you directly to the best place on the IQ option platform for opening the demo account. You will open your demo account in a few minutes. It's really easy to start trading. Then with the real account, you'll only be needing to send in an ID, your personal ID, a copy of your ID, and a copy of a service bill for proof of residency, like a water bill or an electricity bill, and the guys in IQ option will set you up really quick and you'll be trading real money in no time. But do not do so without doing demo trading first, then going on to the real account. Okay, do not ever start trading a strategy in which you don't feel confident enough, when you are not fully confident that it will give you real winning expectancy, and after you feel confident, then go on to trading real money. Never before that. Okay, so when you open your IQ option platform for the first time, it'll look something like this. Okay, so what I'm going to show you is how to set up things and to start to make the platform ready to use in the strategy that I'm going to teach you in further videos. Okay, so first things first, we go here on the left to chart type and change it to candles. Okay, next we go on to the time interval and change it to 1 minute. Okay, so now at this time your platform should be looking a lot like mine. Okay, then next we are going to the indicator icon. Click here, and we are going to use 2 indicators for this strategy. The first indicator that we're going to set up is the stochastic indicator, which is an oscillator. Okay, so now we go on to setup and apply. I'm going to, here we're going to leave the period at 13 and change the smoothing to 5 and the D periods to 5. Then make sure that the overbought and the oversold are set at 80 and 20, because I think when I started it was set to 70 and 30, but make sure that it's at the 80% and the 20% level. 13, 5, 5. Okay, and click apply. Now what this indicator, which is an oscillator, tells us is if the market is going it's not going to tell us, it's going to indicate us that the probability of the market going up is higher or lower. So if the lighter line is what is called the main line of the stochastic indicator, and the red line is the signal line. So when the main line, which is the lighter line, crosses above the red line, the stochastic signal line, this means that the market will probably be going up. When it crosses back down below the red line, which is the signal line, the market is going to go down. Okay? Now we have two lines, or two levels, which is the 80% level and the 20% level that we set up. And what do these levels mean? The 80% level means that when it crosses above this level, when the stochastic oscillator crosses above this level, this means the market is overbought, and the probability of the sellers kicking in is higher. So we can expect the market to be coming down when it's above this level. When it comes below the 20%, this means the market is oversold, and this gives us a bigger expectancy that the market will be shooting up and the buyers will be coming in. Okay? So this is what the stochastic oscillator tells us. And it analyzes this 1355 that we set up. Means that 13 means that it will analyze the past 13 candles up here, the 13 last periods, which in this case are 1 minute candles, and make an educated guess and send us the probability of this happening. Okay? So that's the stochastic oscillator. Now we're going to set up a second indicator, which is the awesome oscillator. And the awesome oscillator we're going to set to 13 and 5 and apply. Okay? So now we have two indicators. Okay, the awesome oscillator is another oscillator that is going to help us decide if the market is going down or if it's going up. So the awesome oscillator shows us this in two ways. First, it shows us green and red bars. Green means up, red means down. Easy, right? But it also gives us up movements, down movements, and it gives us a zero level, which means when we get red bars below the zero level, means that the tendency to go down is strongest, is where it is stronger. Although it is already coming down, when the bars come below the zero line, it's when the signal going down is strongest. Okay? In the same way, the other way around is true. We get a green bar, so we know that the probability of going up it's showing us that the probability of going up is there. But when the bar passes the zero line and starts shooting up on the upside, that means that's where it's strongest. Okay? So what we're looking for is combining both of these signals from both of these indicators to give us the highest probability of a winning trade, whether it will be a call trade or a put trade. Okay? So another thing is, we've already set up the indicators, we've set up the candle bars and the time interval for the candle bars. Now we have to set up what currency pair are we going to choose. And to choose a currency pair, I only trade currency pairs with high volume trading. And that means the majors, which are anything related to the USD, to the dollar, the US dollar. So USD CAD, Euro USD, GBP USD, USD Swiss franc, USD CAD, New Zealand dollar, USD Aussie dollar, USD Japanese yen. So those majors and some of the crosses between the majors, for example, the Euro Japanese yen, the Euro pound, and the pound yen. Okay, so you have about 9 currency pairs to trade from. At least those are the ones that I use, and they have to obey to a simple rule. The profit payback margin has to be at least 80%. I do not trade anything that has a profit payback margin below 80%. Well, at least not in this, with this strategy. Okay, so when looking for what pair you should trade, look for pairs that are high volume pairs, as I said. You can find this all in the PDF file that I have for you, so be sure to request it. And has to have 80% minimum profit payback expectancy. Okay, so if we go up here and pull down all the available options, I don't trade stock options. I only do currency options. Okay, so this strategy is for currency options only. Okay, so now what do? We go and choose the currency pair with the highest payback, as long as one of those currency pairs that I told you. At this moment, the Euro USD, which is my favorite, is the highest, so I'm going to choose it. But be aware that the profit percentage payback percentage varies during the day. For example, the Euro USD about half an hour ago was about at the 75% margin, and I don't trade it. And it sometimes goes up to the 93%. Okay, so be aware of that. It changes during the day. So choose the best pair based on the payback, but always one of those 9 pairs that I told you. Okay, another thing that you have to set up before starting to trade is, as I told you before, this is a strategy that you have to have at least a $250 initial deposit in your account, so you won't be greedy. I'm not going to go into that any further. It's explained in my initial video, so go back and see it if you haven't seen it, or review it if you don't remember. But the initial trading amount that you put here in the amount has to be $1 for each $100 you have in your trading account. For example, if I have $100 up here, I would be trading, my initial trading amount would be $1. If I have 300, it will be 3. If I had 500, it would be 5. If I have 550, it will be 5. Okay, so as long as you're in the $300 to $400 range, it's $3. When you get to the $400, you change to 4. Okay, until then, maintain the $3. Okay, so at this point, you'll have your trading platform completely set up and ready to start trading this strategy that I'm going to teach you in the next video. Okay, so please, if you haven't done so, go to the link below, click on it, open your demo trading account through the link. The guys at IQ Option, once again, I'm telling you, this is by far the best trading platform out there for options, not for Forex market. For the Forex market, don't even try it. But for option trading, it's excellent, excellent, excellent. So go down, click on the link below, and open your demo account. Be sure to request the PDF file that I have ready for you to send out through my email that you'll also find in the description, and I'll see you in the next video.